I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. There's nothing new here in the position disclosure. I probably should have been a little tougher on that path trade. I let myself get stopped out, even though it didn't break the previous day's low. I tightened myself up probably a little bit too much on it. But it is what it is. We got stocks getting smoked here after hours. This is Upstart. Upstart's down 21%. It looks like they beat across the board. But I don't understand. How come stocks can go down if they beat on their earnings report? Because look at the run that it had into it. That run that this had into it's insane. This 260 here is actually big support. Put in a post-market low here of 263 or so. But yeah, that's getting destroyed. Wooden Resorts looks like it snapped back a little bit. Initial downtick there. The numbers didn't look good from the peripheral view I had. Fubo down big here after hours as well. What else? Coinbase. Yeah, that was my guess on Coinbase. I definitely guessed down on Coinbase. This run into this area here on Coin though was solid for the bulls. Kind of blows my mind that it was able to get up there, but that breakout through 280. You know, Kathy Wood's been selling up here the last couple of days. I think she got totally bailed out of a bad trade. Remember, she was buying it big on the IPO day when we were shorting it. My opinion on Oracle? They didn't report, did they? Just the technicals? Technicals on Oracle look fine. Look bullish. You know, as long as it's able to continue to hold this 94 support. If it loses 94 support, you still got more support at 92, which is where it broke out from. I think Oracle looks just fine. Just fine. All right, let's get into the meat and potatoes here of our meeting a little bit. Let's take a look at the indices. All right, so Spies here down. Oh my God, who would have thought the market could go down? Spies are down 0.4%. Q's destroyed. Down 0.8%. It's not destroyed at all. And that's probably is it moving lower here after hours? Is Q's? Looks like it. And IWM here down 0.7%. You know, so look, there wasn't a ton that I was loving today. You know, I traded some AGC, you know, on the news when that came out with some success. I lost a little bit of money in PayPal. I lost a little bit of money in Path. I probably should have stuck with that Path a little bit better. But there wasn't really too much I was going with. You know, we've said for the last couple of days here, this market is really extended. It needs a break. The VIX is moving higher here along with the market. There's plenty of concerns to be had. So, you know, the last two morning meetings, it's been the same song and dance of, you know, be very careful to put shorts on because we're in a momentum market here that's totally broken out, and you don't really want to be shorting without a real signal coming in. But also, it's, you know, borderline irresponsible to be doing a lot of long buying into large degrees of extension in the market. So the market yesterday gave us a time correction, and then today it followed that time correction with you know, a little bit of a price correction, price/time. You know, it sure felt like when we had that one dip in the market today, like it was the end of the world, right? Like these 4 red bars here in a row where it picked up and volume kind of maximized at this bottom. But, you know, again, like I was pointing out to the team in real time when this low came in, guys, have some perspective, you know. We're not even at the ADMA on the daily chart yet. We're not even at the ADMA on the daily chart. And then I remarked that into this bounce here in the moving averages, you know, you're probably better off putting on some shorts and putting on some longs, especially if you've got a long portfolio and you're looking to, you know, hedge out that portfolio a little bit as the market is finally giving us a little bit of a price correction. But even with all that, even with having a down day today, this market didn't even get to the ADMA on the daily chart. So we're still slightly extended. We still probably need some more time or price to correct this upside move. So it's definitely a good start for the market. It's healthy. You guys got to understand, even if you're bullish, it's healthy. You don't want this market just accelerating to the upside and going totally parabolic. Pretty much every example of that in history has ended in tears to kind of one degree or another when the markets go parabolic. It's just a matter of how long it can hold out. And getting a little bit of a price correction here and some time correction, that's fine and healthy. Let's look at the Qs. Same thing with the Qs. Oh my God, the Tesla's destroying the market. The Tesla move was violent, though. It was kind of crazy. But the Tesla up move was violent. So what do you expect? I mean, all we did, doesn't it seem like just yesterday? I mean, it almost is. Just yesterday when we were all, oh my God, Tesla's breaking $1,000 on all this bullish option flow. And guess what? The massive Tesla sell-off today didn't even get us back down to $1,000 exactly. Got us close, but didn't even get us all the way down to $1,000. So this is good. All this stuff begins to potentially reset up the market for us. And even with that, the Qs did not even pull back to the 80 MA. I probably will consider starting to get a little more aggressive to the long side if we start seeing like Q290. That would be a little bit more interesting to me. And then the IWM, IWM price corrected as well. And this IWM move on this breakout has been fantastic. We talked about that it's been in a 10-year consolidation. That 10-year consolidation broke out. I'm still expecting higher prices from the IWM, but it shouldn't be straight up. It should be an uptrend, right? Straight up is not an uptrend. This here, over the course of these last 6 days or whatever in the IWM, this is really not an uptrend. This is just up. And when you're looking at just up, it's momentum, not a trend. This breakdown, this price correction, potentially starts to put us in trend. What we need is a higher low, and then it's just a matter of where, when, and how that higher low comes in. There's still plenty of room here for this market to pull back to 238, even 235, and still be bullish and healthy. So let's continue to watch this market as we price and time correct so we can sink our teeth into a potential higher low and get a little bit more excited about that. Because these last couple of days in this degree of extension, really yesterday and today, I don't think we're particularly easy, but if you recognize that, if you were game planned for it like we were, and you picked your spots, then it was just fine. I had a few names on the radar today. Some I almost got involved in, but didn't. Some I kind of did get involved in. Happy to kind of go through them a little bit. I traded this path. I keep trying to be involved in this path, and I keep not catching it properly. And honestly, I tightened up my stop too much on this thing and ended up stopping myself out for a loss. My original game plan was to give this down to yesterday's low, which is 55.30. And I endured this entire pullback. Not only did I endure this pullback, I actually added into this pullback and, caught this bounce. I was being greedy, though, with my game plan. And, I never really was able to kind of fully cover my risk on it. So I figured let me tighten my stop up. And even though the stock didn't make new highs here, I kind of just tightened my stop up kind of based on this pivot area. I ended up getting stopped out on the way down here, and it actually closed great. So this path looks totally intact. It's actually an inside day and up, and I took a loss and I got my stuff stopped out in it. So that's actually probably not a good job. I got in my own head. I did exactly what I tell you guys not to do. I'm a big believer in buy the ticket, take the ride, right? You have a game plan, follow through on the game plan. And you know what? I got in the trade with a game plan, with a set amount of risk, giving it down to yesterday's low. Was able to trade it back and forth a little bit to take some risk off the table, but was never able to kind of fully cover that risk. And then when the market started breaking down, I said to myself, you know what, you're a dummy for adding on this extra risk to your overall swing portfolio, because I still do have, plenty of long risk on this market. You're a dummy for adding risk on any new positions when the market's extended. So let me, tighten up my stop and deviate from my game plan. And then, of course, I end up getting stopped out on this pullback, taking a loss, and it closes great. Closes in such a way where I would have been, decently in the money here on this close. And instead I get stopped out for, not a loss that was the risk that I was originally putting onto the trade. But the thing is, I could have taken the whole loss. This whole market was breaking down the way it did. If it broke yesterday's low, I would have taken the full amount of loss on my trade. Instead, what I did was got in my own head, said, you know what, you're stupid, talking to myself, for adding new risk when the market's extended. You know not to do that. Path isn't even particularly in play today. There was no new news on it. It's just a name that I've kind of wanted to be involved in. I think that the daily technicals look good, but the market itself is not on my side. So then what did I do? I deviated from my game plan. I got stopped out. I took a loss. But it's just a really bad job, because if I put on the full amount of risk anyway, I easily could have lost the full amount of risk, but I'm not being here now for the potential reward on it. And that's not something that that doesn't breed consistent profitability, and it's not a good job. And again, I'm happy to go over with the team always the mistakes I make trading, so that we can all learn from them, and I can review them for myself so that I can also get better. I try not to make too many mistakes. I like to think at this point in my time, in this point in my career, I'm for the most part a pretty good trader. But what I did here in this path, tightening up my stop, getting stopped out, taking a loss on it, not following through with my game plan, that is not what breeds consistent profitability. And now here we are with the stock closing strong, closing green on a day when the market was weak, showing relative strength, closing almost at highs, closing at 57.40, which was nicely above my price, where I would have been able to actually have this initiation into my portfolio and swung it. And I'm sitting here with a loss that was about a loss of about half the initial risk that I put on. And that's just a waste of money. It's putting on risk. I could have taken the full loss. Like, basically what I'm trying to point out to you guys is I put myself in a position to take a full loss, and I did not put myself in a position to get the full gain. Because if I put myself in the position to get the full gain, I would still be in the trade. And I didn't do that, and that's a bad job. So that was one thing I traded today, was that path. I took a couple tighter trades, not too much. I didn't go after this PayPal aggressively. I tried PayPal twice. One was actually versus this low on this pullback with relatively tight risk. I got stopped out when new lows came in, so that wasn't great. And I tried it one other time, I think. I think it might have been into this snapback here. And it was when it came back above 205. And I remember, you see the high here is 205.54. I was offered 205.54. That would have been my break-even kick to get my risk covered. And I got filled like 65 shares or something like that. So that was just bad luck. I remarked, and look, I try, I think this is actually a really good exercise, a really good psychology exercise for all you guys who are traders. I try to never attribute anything in trading to bad luck, but I will attribute things to getting lucky. Like yesterday in CCJ, I remarked that I did not get stopped out of CCJ by 1 penny. And I got super lucky. That's lucky. Today, I didn't get my kick in PayPal literally to the penny on that second trade I took. So again, I took a loss on that trade instead of getting break even. If it was 1 penny lower, I would have been able to be break even on the trade, blah, blah, blah. That's it really is just bad luck, I guess, but I don't want to attribute it to bad luck. Maybe I could have executed better. Maybe I could have done something a little bit better to actually get that kick as far as pricing goes or something like that. That could have been a game changer for me. So I had 2 relatively small losses in PayPal today. I lost some money in Path today by doing a bad job with it. And our good friend Josh here made me money in this AGC, which I appreciate. Josh for once, not Pat, making me the money. Josh got the, I don't know, tweet or whatever it was on this AGC into the VTF really early when the volume picked up here. I think I bought like 1340 something on the way up in this thing. And I didn't swing this, just kept this as a day trade. I actually got out of it entirely into this big up move here. But this AGC paid me pretty well. I was able to luckily make more in AGC than both my PayPal losses and what I lost in Path combined. And that is how trading is supposed to be, right? That is a demonstration of good risk reward, right? If I have one trade that pays me and I've got 3 trades that cost me money, and net I'm still profitable over the course of all those trades, that means that I'm trading with a good risk reward, and that's exactly what I need to do. And if I could have done a better job in path, then it would have been really nice. Luckily, some of my other swing trades today were showing really good relative strength, so I actually posted some pretty solid P&L today, considering I'm net long the market, and it was like the first down day that the market has seen in a while. So I can't really complain too much, but I'm a little bit upset with myself on how I traded path, and that's pretty much it. That's kind of the state of the market. This is healthy, right? I just want everyone to recognize this is healthy for the market to back and fill. This is what we want as traders. I don't like coming in on a morning meeting and saying, hey guys, there's not really too much I like today, the market's in a tough spot. I like coming in the morning meeting and saying, hey guys, there's a lot of opportunity out there, this market is set up really well for us. So hopefully this price correction and time correction that we're starting to experience in the market is the beginning, probably not for tomorrow. We'll see how we gap. If we have a big gap down tomorrow, it could be a solid buying opportunity. But barring a big gap down tomorrow, we might be looking at another day or two of a little bit of a less is more approach, focusing on stocks that are in play, and then maybe this market will start to set up a little bit better for us to kind of be more aggressive. And that is all I got. So not too much for you guys. So happy to look at any questions that you guys have. Let me scroll through the VTF. Jong asking about SoFi. Yeah, SoFi is down after hours because it's trading as a secondary to UPST, which is down pretty big here after hours, even though my peripheral look at the numbers, it looked pretty decent, but it's just up so big into it. So that's what's going on there. Next from Steve. What was the signal that helped you determine today might be a down day for the Spies? I think you noticed it shortly after the open. Yeah, so thanks, Steve. I know you gave me a compliment earlier today as well that I kind of was able to call the market pretty good. It's just the degree of extension and the way that we were moving into the inside day low, right? Because we got to remember that yesterday was an inside day, and we got to remember that the market's extended. So we're opening up. Yeah, it's a bull market. Yeah, we have this rest day. But if we lose this inside day here, it probably is a signal that the market's going to give a bigger price correction, and that's 468. And if you kind of look at how we started to trade into that 468, it looked a little earlier to me like we might lose it. And at the same time as that, I'm looking at the NASDAQ. And if you remember the morning meeting, we thought that maybe the NASDAQ could be relatively strong today. TLT, which eventually reversed a little bit, this TLT has just been such a beast of a trade, how this thing's been moving higher back into this resistance despite the tapering talk. So that means that interest rates are moving down. So the opposite of yesterday, right? Yesterday I was looking for relative weakness in the Qs, relative strength in the IWM. Today I was looking for the opposite. So the IWM, I'm like, all right, this IWM is super extended. It might price correct a little bit, and it was weak pre-market. Spies here, I'm understanding, if it loses that inside day, it could lead to a price correction. Qs had an inside day as well, but we're looking for the Qs to be relatively weak. And when the Qs lost this opening low, that also made me be like, all right, I'm seeing the Qs kind of break their opening low. What's this going to turn into? Because with the gap fill, very shortly after the gap fill is a break of the inside day. And at the same time seeing that kind of in the Spies just made me think that we could see weakness. And then the biggest thing I was trying to guide folks on this breakdown here was not to be too aggressive in buying in this. And maybe that was it. Maybe this is the dip, right? This is the big market dip, and that's all we get. But if you got, we need to have perspective. That's all I was also trying to say when we were breaking down, and obviously Tesla was really getting whacked. And I was like, guys, just have some perspective. Don't be too aggressive yet. This isn't the end of the world. Look at what this market just did, right? Since mid-October, this rally is insane. It hasn't even been a full month. And the Spies went from, 440 to, 470. It's just a huge move in a short period of time. And we understand that extension. You start seeing those price corrections come in, And it was just more of a signal to me to not be aggressive. And again, maybe that's kind of, I mean, I know that's what got into my own head a little bit and caused me to trade that path incorrectly. But yeah, Steve, that's kind of answers the question. You know, I'm constantly trying to look at all of these things at the same time. You know, you guys see my one screen because I'm sharing my one screen usually for the first hour or so every day, and that one screen is linked to my main market maker that I use. So you see how I'm constantly typing up stocks, but what you don't see is that I've also got these separate charts of the Spies and the Qs that I'm constantly paying attention to, and I'm you know, scrolling through all these names, all these sectors, and trying to digest all this information in real time to try to get an assessment of what this market's actually going to do here. Cool. Dylan saying that a new Derrick the Trader, how to calculate your position size video is online. Sweet. That's me. So figure out your position size and what you're risking on each trade. This is a good one for new traders especially to watch and to check out. Make sure you click this button right here so it's a like, and make sure you hit the subscribe button. I don't even know where that button is. Make sure you hit the subscribe button as well. Sahil saying I had so much conviction on SoFi today. Yeah, but it failed right away. We spoke about the SoFi in the morning meeting today, and I mentioned, you know, I really like this pattern here. It was a really, and we need to ignore this a little bit because this is after hours trading. It's getting hit with UPST. But you know, it's a really bullish looking pattern. The ADMA is caught up. The inside day is here. There's a lot to like. At the same time, this thing's basically at my profit target, my price target. My target on this thing based on my game plan has been $24. It's been $24 since stock was at $14. So I caught this entire move. I wasn't looking to be too aggressive on this today. And the intraday price action, you know, you really want to be buying above yesterday's high on this, and it opened to basically right at it. So you might have gotten faked out in the first 2 minutes of the day. And if you did get faked out, if you bought, you know, 23.10 or higher today, I don't think that's a bad job. I don't think that entry is a bad job. You just got to make sure that you manage your risk properly, that you're getting stopped out at whatever that opening low was, or the gap fill, or, you know, whatever the specifics of your game plan was. There is no way that if you got kind of suckered into this SoFi here in the first 2 minutes of the day, there's no way that you should still be in this by the time the third bar of the day is closing. You got to have your risk management in place because trades fail. And we also know that the SoFi, I think, has earnings tomorrow. UPST has earnings after the close today. So that potentially limits your profitability because you might not want to swing it into earnings because that is always kind of gambling. So, you know, it's great to do your research. It's great to have conviction on a trade. Stick with that, Sahil. It'll end up paying you in the long run. But it doesn't matter how much conviction you have to manage your risk. I can tell you guys, personally, the biggest and worst losses I have ever had in my entire trading career, this is really important, the worst losses I've ever had in my entire trading career were oftentimes some of the trades where I had the most conviction. I don't really make this mistake, I don't think, in the same way anymore. I'm sure I will again at some point. But the worst trades I've ever had were when I had so much conviction that my idea was going to work that I did not have a game plan in place for risk management and money management that was appropriate. I was so convinced my trade was going to work. Why do I got to manage the risk if the trade's going to work, right? And then the trade doesn't work. And then you're in a bad spot. So, great to have a lot of conviction. That conviction comes from your research. Always also have a risk management plan in place because there is no such thing as 100% in trading. There is no such thing. I mean, even UPST, you know, this is one of the examples I love to say. UPST, I haven't looked at more detail into the report yet, but it looked like the earnings report from what I saw very peripherally was solid. It looks like they beat across the board. You know, so if you had, like, not that any of us would ever do this, but just in a hypothetical world, if you had insider information on what UPST's EPS, revenue, and guidance numbers were going to look like, and you knew that those numbers were going to beat across the board, you probably would bet the house on buying the stock into the close. And then you'd be losing your house right now. So there's no such thing as 100% in trading. Anything can happen. Anything can happen. Anything will happen. Where's Fubo now? I see you guys chatting about it a lot. Snap back a bit. I love this Fubo as a trading vehicle. I have no position in it right now, but trade's great. Fubo sales beat estimates and they raise guidance. That sounds good. Next here from Matthew. What do you do when you have a stock that you are swinging with a good profit cushion? Would be day 2. What do you do? Let me just reread that. What do you do when you have a stock that you are swinging with a good profit cushion and it would be day 2? Do you keep your out as your normal out, or does it turn into that day low that you bought it, even though the risk reward to the day low is too much risk? Matt, I gotta be honest, I don't fully understand the question. It sounds like your question is if you're swinging it, so you have it from yesterday, and now it's the second day, do you keep your same out? That's kind of what the question sounds like. But then the question also kind of sounds like that you don't have it on day 1 and you bought it on day 2. What do I use as the out? Is the original out might be too much risk? So either way, I can kind of answer it. First of all, if it's day 2 and I have it from day 1, I keep my original out. Almost always, if I'm swinging a position, it means that I am committing to trading it from a risk perspective based on the daily chart. I'm going to use my original stop loss until the stock will enable me to trail on a daily chart. I don't just like raise to the next day's low or something like that. You're going to get shaken out. The risk reward of keeping the position overnight is not worth it. And then if I'm looking at it buying a day 2, because I wasn't in day 1, which might be what your question is asking, you got to recognize that you're relying on momentum purely to pay you. And I usually don't like to purely rely on momentum to pay me. You just have a higher probability of getting shaken out of a trade that could work when you're relying on momentum. When that ADMA hasn't caught up to your stop loss, you have a higher probability of a shakeout. So it doesn't mean I'll never do it, but you got to recognize, you're probably going to use an intraday out, an out from that day, but it's extended, and you have a higher probability of getting shaken out of a trade that could work. So it's just not a great situation to be in, which is why I tell guys all the time, don't buy day 2. Once in a while I'll still do it, but it's got to be like, things got to really be lining up. The volume, momentum, the option flow has got to really all be coming together. Next here from JC. When you do your opening drive type trades, how often do you take liquidity, if at all? That's a great question. So I think people know that I don't do a lot of taking liquidity, period. I probably provide liquidity 80% of the time, something like that. I think I'm one of the few traders, actually. I'm surprised it's not more from you guys, because a lot of you guys learn from me. I think I'm actually one of the few traders who, at the end of a typical month, get paid by the exchanges for my order flow, because I provide so much more liquidity than I take. So I'm still on those opening drive trades, trying to provide liquidity when possible, but it's also a situation where sometimes I take it. And honestly, because I'm trying to provide liquidity, sometimes it means getting a worse price. Like going to Path here as an example. This Path opens, what was the opening price here in Path? It opens at 57.34. And it quickly ticked to this low of 56.78. And Path trade's a little bit thin, it's a little bit spready off the open. So it puts in this low here of 56.78, and now it's upticking. It's upticking. There's a little bit of a spread. And I'm like, okay, I want in. So I threw a bid in at 57.01 for I think 800 shares or so initially. 57.01. And I didn't get filled. Stock spread away from me. So that I could have just taken the offer at probably 57.10, something like that, but I didn't. I tried to bid in, and that I'll do that a lot, and a lot of the times I get filled, but every once in a while I don't, and this was a circumstance where I didn't. So what ended up happening was I kept a bid at 57.01 for some of the stock, and I ended up taking the offer at like almost 57.40. For a bunch of the stock that I didn't get filled on because I wanted to be involved in it. So that hurt me. In this case, it hurt me, because I ended up having a worse opening price than I would have liked. I was trying to be patient on this one here because I was giving it real risk. I wasn't just giving it to the day low, even though I could have. I was giving it to yesterday's low. I was really trying to give this some space because I really like this stock. I've wanted to be involved in it for a while, and I like how this pattern is setting up. And I ended up getting a worse price on that. Again, I definitely got in my own head a little bit on this one today. And I took liquidity, by the way, also. At that point, I just took the offer. I was like, I'm trying to be patient. They came down. They almost kind of filled me a couple times. Bam, I'm just taking the offer on this. And ended up paying up 30, 40 cents compared to usual. So it definitely depends on the specifics of the situation there, JC. I'm trying to provide liquidity whenever possible, but particularly on these thinner stocks where it's a little bit spreadier, it can be difficult. And honestly, my 800 share bid on this was too much size. I should have refreshed the bid and hit it. I think I actually spread the stock up away from me by showing that 800 shares. I think the robots, it was ticking up, and the robots saw my 800 shares come in, which was 800 shares was a decent little bit of size compared to how it was trading, and all the robots populated in front of me, and I think that's what caused it to kind of move up ahead of me. So yeah, I still try to provide liquidity whenever possible, but it's not worth it in a situation like this. Like if I got filled on that bid, I would have saved myself 10 cents on the spread, plus some of those execution costs, the difference between taking liquidity and providing liquidity. But instead, I ended up paying up 35 cents for some of that stock, which costs me significantly more than the initial spread or the initial difference between paying the exchange fees and the rebate that I would have gotten. Yeah, I guess again, it really kind of depends on the situation. It also depends on the price. Like you'll also see sometimes if I'm a little bit late, I'd rather miss the trade than get too bad of a price. In this case, I really wanted path, so I ended up chasing a little bit. But a lot of other times, if I don't get that 5701 bid, I don't care. I'll let the whole thing go without me. I want my price or I don't. Because if I'm not getting my price, I'm not getting like the risk reward that I want, and I would rather a trade go without me and I don't get stock, and that happens sometimes too, and it just kind of is what it is. All right, LOL at Josh for once. Oh man, thanks, Steve. You guys are funny. Damien just saying Peloton. I don't know if that's a question for me. I could take a look. This Peloton was disappointing. I was swinging some Peloton from yesterday, even though it didn't close fantastically well. And I got super lucky with that news pre-market this morning that came out. And I got a big pop off that news. And look at that. That was traded higher pre-market than it did at any point. I liquidated some stock, I believe, at 53.49 pre-market into that initial pop. So that was great. And then when the market reopened, I was just buying back the stock that I sold higher at lower prices. So that was great. And then I kind of just stuck with my game plan a little bit on this. I did not get stopped out of this at yesterday's low, which I know Brant was asking me about that a little bit intraday here. I'm light enough where I'm still kind of watching. Like I said yesterday, sometimes these big gap downs like this, before you can get a bounce, it's like 3-4 down days. So now we're on the third down day today. They still sold into that news today. That means that there's still some institutions out there that are just trying to puke out of the stock, and they were probably thankful that news came out so that they had some buying pressure to sell into. And that's, it's still good for me. Because if the news didn't come out, this thing closed at 50, maybe this thing would have been down at 46 or 47 today without that news, if the same degree of selling was still coming into the stock. So, I'm still watching this Peloton. It's super beaten up, obviously. It's extended to the downside. I still like this company a lot. I still think that at certain prices, this actually could become a buyout candidate for somebody. So I'm not super heavy on my swing, and I've honestly traded it really well between yesterday and today, all things considered. So I'm pretty happy with my current positioning in Peloton. I'm pretty happy with my sizing, which is, I would describe as my sizing in Peloton. I'm not allowed to tell you guys exactly how many shares I have, but I would describe my sizing in Peloton as perfectly appropriate. I've got enough stock here where if it sells off further, I'm not going to get hurt, especially with how I've traded it. But I've also got enough stock where if I can get my move to my target, which is like $56, I'm only looking for a move to like 56 on this thing, that I'm going to be able to get paid decently. So that's Peloton. Next here, Lons. Asking for thoughts on Tesla over the next couple of weeks. Pull back more or get bought up here. Very hard to say on this Tesla. So Tesla closed really bad today. The way that this Tesla closed today would it have me inclined to think further downside price action on it. But it's also really difficult to say. Honestly, whether Elon sells or not is going to be really big. If he's forced to sell $10 billion worth of stock, you better believe that's going to impact the price of this thing. So for me personally, for Tesla, it's on the do not trade list right now. And honestly, and I even said this to Pat, there was a great shorting opportunity in Tesla today. And the great shorting opportunity was on this pullback here. Really particularly here, like off this candle. Got crazy extended, huge volume. This was a bloodbath. Big snapback to the ADMA here, and this ADMA just started acting like a weight on it, and it created this little lower high here right on there where it tried to pierce above and failed. This would have actually been a great spot to put a short on in Tesla. I don't love trading the stock. It's so expensive. I'm really not in a rush to be involved in it right now, so I didn't end up doing anything with it. But Tesla today was gross, and if Elon is on the offer, it's going to make this stock really heavy. So I would stay away from this after today right now. I don't think that it's a great idea to come in and short it here. I think that chip has kind of sailed to a degree. I mean, look, it could trade back to $900 easily, and there could still be another $120 worth of reward on this. But what are you risking to get that reward? So I think that the short at best is difficult, at worst is totally gone. And as far as a long goes, you don't want to be too early on this. If Elon is on the offer with the run that this thing already had, I really think that this Tesla is kind of in wait and see mode right now, and that's just near term. As far as going back to your question, next couple of weeks, man, 2 weeks from now, your guess is as good as mine on where this Tesla is with the way that this thing trades. I have absolutely no idea. Best I can do is try to give you some short-term clarity. And then we will kind of take it day by day and see how this thing plays out. The biggest thing for me that's most interesting about Tesla is because Tesla's market cap is so big, how this thing potentially affects the Spies and the Qs. Like if you actually look at the breadth numbers today, the breadth numbers in the market were actually not that bad, considering that it was a decent little down day today. And I can even see that in my own swing portfolio. I got some stocks today that performed pretty well. I'm nicely green on the day today based off those swing longs that I have on. But when the market when Tesla and the market got hit at the same time here, they initially sold everything on this down move. The algorithms in the market, I can almost like feel them. We're like, all right, sell everything. And then they were like, okay, never mind, there's some things we still want. What I feel like the algorithms kind of did there. Because again, breadth was not terrible, but it's interesting to see how a stock like Tesla with that sell bar coming in affects the market, and then how the market affects every other stock, because we all know market correlations increase on the way down. Especially market correlations increase on the way down, right? Because when they start selling, when the market participants start running for the hills, they start selling everything indiscriminately. And that's actually what creates fantastic long-term buying opportunities. Like if you go back to the coronavirus crisis low, which, by the way, for people who are on the team, not to humble brag, but I'll humble brag a little bit, we caught the absolute bottom this day. I did something on this day here on the coronavirus crash, this March 23rd, that I think everyone knows I almost never do. I bought a ton of stock into the close that day. I normally don't like buying stock into the close because I feel like you're gambling on overnight risk. But I remember being in upstate New York because all our offices were shut down because of coronavirus, and buying Microsoft, Apple, Alibaba, and a bunch of other stuff into the close that day and just taking on the pure overnight risk because I loved the hammers that came in that day and the degree of extension. I was like, I need to have stock. And that obviously worked out really well. I actually still have some of the Microsoft. So yeah. I hope that helps. I hope that helps, Lons. Diego's got some new swing longs from today. Peloton and AEM. Somebody was asking about gold yesterday. Diego is our resident gold bug. AEM with a good day today. What did GLD do? Someone was asking about GLD on YouTube. This GLD is starting to look solid. I'm concerned a little bit by the extension. I actually don't want this GLD to really clear 171 yet. I want it to back and fill a little bit and then clear this 171. But it's looking good. And I assume that that's going to bode well for the gold miners as well. Yep, no problem, Steve. What's Neo doing? Neo's down. Good. Glad to see that, actually. Neo revenue. I'm seeing the revenue number, but I'm not seeing it versus expectations. EPS beat and revenue beat. Here we go. Oh, it's a solid beat on the EPS. It's still a loss, but it's a solid beat. What about the guidance here? It's tough because it's all in RMB, right? Yeah, initially here, those Neo numbers look good to me. But same thing with the UPST, and it's trading down. Steve here. Hi, Derrick. Not that I am a buyer of AMC, but a friend just sent me a chart of AMC that is forming another consolidation wedge, approaching a 5-wave pattern. I assume that goes to Elliott wave theory. For theory on chart reading, can we have a look at AMC? So first thing I would tell you is I am not an expert in Elliott wave theory. It is something I studied a little bit 7 years ago, 8 years ago. And it didn't provide me any benefit. So I never really implemented anything from Elliott wave theory into my trading, and I still don't. So, it sounds like the information that you're providing is based off Elliott wave, and I can't really give you any feedback on that. I'm short AMC. AMC, I think, reported good numbers last night, and the stock, it got traded down on it. So I don't know what's going to make this AMC go up if good numbers can't do it. And they're trying to make an AMC coin or whatever. I'm still short. I actually want this thing to go higher because I want to be more aggressive on my short selling, and I don't want to be more aggressive below 45. I shorted AMC. I wasn't allowed to talk about it because when I am in my afternoon meetings and they're streaming on YouTube, I'm not allowed to talk about any trading I'm doing as I'm doing it. That's a compliance rule for live streams. But I was actually shorting AMC when I was doing the afternoon meeting yesterday into the initial pop that it gave. And I made some money doing it. I shorted... What did I short? This is real, right? This tail's real. Up to 47. Yeah. I shorted 46.50 and I think 46.99 after hours yesterday in that initial pop and made the down move, but I wasn't allowed to talk about it. But I closed out of that position into the down move. I didn't keep anything except for what I was swinging into the report overnight. So I'm small AMC short. I don't... If you want to talk about pure technicals on this, it's neutral. The pure technicals are neutral. It's building out a big wedge. And if anything, maybe it's a little bit bearish because it tried to break out of that wedge into the earnings report yesterday to the upside. And the earnings report had it fail back down. So, if anything, you just had a false breakout of the wedge yesterday in AMC. And we do know that false breakouts sometimes lead to breakdowns. So we'll see what happens if this thing starts going to 35. So it's neutral at best, bearish at worst, in my opinion. I'm still short of the price target of 20, but I have a very small position on that, and I'm just sticking with it out of stubbornness more than anything else. I just want to say I was right. I'm not going to make real money with the position size I still have. But to be fair to myself also, I've already made a lot of money in this AMC short. So that's that one. All right. Scrolling through here. Next from Sebastian. Hey, D, can you give me some thoughts on this? Can you give me some thoughts on this idea? Moderna mRNA above 246. Above 246. Inside day from yesterday. Yeah, for a snapback trade, just don't have too big expectations on the reward. I like the idea of trying to buy if you did it today, even though it failed. I wouldn't have hated the idea pre-market today of buying Moderna above yesterday's high. If you did that, it would have failed. But that just would have been a snapback trade just because it's beaten down into a broader support area, and you're looking for a snapback to like the 80 MA basically, and the risk reward on that probably was worth it. And then obviously it was just so weak today that you probably got stopped out. I broadly don't like being long this Moderna right now ever since it broke down. If you're looking for a little bit of a snapback trade and you time it well and you're not greedy, fine. But otherwise, this is also one that's kind of on my do not trade list. I know it's down 50% from its recent highs, but I never thought that this stock belonged anywhere near $500 to begin with. And it seems like the downtick that we're seeing broadly in coronavirus in the United States, which is a good thing, and coupled with the new Pfizer and Regeneron cocktail drugs, antivirals, is bad for Moderna for the vaccine. I can just talk anecdotally. I have the Moderna vax myself. This is the one that I got. I'm in no rush looking to get a booster shot or whatever. If the FDA recommended it to me or whatever, I probably would. But with my 2 shots and knowing how effective this Moderna was to begin with, and seeing these coronavirus cases in the United States finally coming into a broad decline, as opposed to up until now, you would see declines in some areas while other areas were kind of popping up. I'm in no rush to get the third shot, of this Moderna myself at this point. And I think a lot of people are probably starting to think that way, especially if these numbers kind of keep declining. So we'll see. And it seems like at $500, this thing was just pricing in exponential growth. Like, I almost feel like for Moderna to justify a $500 stock price, and I wasn't shorting it up there either because there was so much momentum. You would need like a new pandemic to come out every other month, and them to come up with the vaccine first in order for that to be a solid company at $500. So I'm not a big fan of it in general, but a snapback trade there, sure. ASAN, yeah, I like it. I think we spoke about it in the morning meeting yesterday or today for basically that area. It looks good. It looks good versus today's low for sure. I like it. CNK. The CNK was on our radar this morning. I have it on my list. And it gave a great little opening trade here, and I felt like I missed it. So I just never got involved, and it pulled back bigger than it should have. So this was on my list today, so I like the idea that you went for it. Obviously it failed. Hopefully you're able to manage your risk with this opening low, because the ADMA had totally caught up. So hopefully you had a good price, got your risk covered, and got yourself stopped out. So I definitely like that one as well. Next here from Ernest. Greetings and thank you for the material and commentary. No problem, Ernest. I'm glad that you keep tuning in. Give me the likes on there. We're trying to build it up a little bit. Would you please provide thoughts on Rio and Mgi? Sure. I should have Stefan provide you the insight on Mgi. So I don't like trading Rio Tinto or Vale very much because they're ADRs. I don't like how they gap on the daily chart, particularly this Rio, because it's an ADR. I know, and I haven't, and because of that, because I know I don't like to trade it, I haven't looked into them too much. I know there's been a lot of chatter in the VTF on both these, particularly Vale here as value plays, just kind of with where they are and with what's going on as far as material prices go. But I personally don't have too much feedback for you on this one. My brain can only handle so much information, and when I see these names kind of come across my screen, I usually just move past them because I know I'm not going to trade them anyway, so I tend to not do the research on them because they're ADRs. But I do know that there's been a lot of chatter out there as far as value goes. One man's value name is another man's value trap. But it had a good wake-up day yesterday. Technically, these things are just in downtrends. They need to prove themselves, though. So I apologize. I really don't have too much for you on Vale Rio. MGI. Okay, so this MGI, I've been in this MGI for a while. Initially from a price of like 550 or so, like, I don't know, back, I think late last year. I think I'm in this thing from like 550 in December last year. And this is not a name that I'm just sitting on. This is a name that I've traded very actively on the way up into this move, on the way back down, on the way back up, on the way back down, on the way back up, and on the way back down. Generally lightening up on the way up and buying back stock on the way down. So overall, this name has treated me really well. The degree of this sell-off here was a little bit mind-numbing, for sure. This thing is just kind of gross, the way that this rolled over. You know, it was like one thing. It was like, all right, like, I remember, we're like, all right, the 950 support. Okay, we lost 950 support. All right, the $9 area is really trying to hold. All right, we lost $9 area. But off the $9 area, created 850. All right, we lost the 850 support. And then the trend just kind of accelerated to the downside here. You know, definitely also a value name. I would say it doesn't belong at $5.50, but the market is stronger, is smarter than me. And for myself, I'm just kind of continuing my game plan. I've gotten heavier in this thing into that $5 zone. And then yesterday, it announced some good news. So it announced that the company's initiating a $50 million buyback. I would like that to be a little bit small. So, Stefan, if you could call the CFO of MGI again. And I think Stefan here in the VTF spoke to the MGI like CFO or something like that on like the 4th. And then like 2 days later, they announced a buyback. So good job there, Stefan. I'm sure you had nothing to do with that. But if you could get him to do a little bit more, I'd appreciate it. So that's obviously great. You know, we love when a company is going to be on their own bid, even if it's in a small way. From a technical perspective, this thing has a lot of work it's got to do. You know, we do have big support into this $5 zone. That's why I got, you know, good bit heavier there again. But it's a nice initial move here. We need to clear this negative Maribozu first. This volume candle here is the highest volume candle that it has had since it broke out back on May 7th. And that's when it broke out and it gave this run, right? It had always kind of been, you know, would have these runs, but broadly was stuck in this range until it had its big breakout day. So this volume on this negative Maribozu bearish candle is the highest volume candle it's had since it broke out. We need to recapture that high technically. Really, we need to recapture 650 technically. And then this thing's going to start looking a lot better. But step number one, we got to get above the negative Maribozu high from November 2nd, which is $6.11 on a closing basis. Because what that does is anyone who is selling short on this day is getting squeezed. Anyone who is a long seller on this day, they're out of the way or they're possibly buying back. So that's step number one. Step number two, where I think this thing starts looking a lot better, is if we can get a close above 650. We have another negative Maribozu at 650, and that's also kind of more coincides with the 21 EMA here. So if we can start really clearing 650, we probably have about confirmed a reversal of this downtrend. And then the bleeding should at the very least stop. And then maybe we can start to build an uptrend on this thing and then start recapturing some other key levels like 750 and 850. So definitely one step at a time here on this MGI. It's been brutal on the way down. But this is why you guys got to have a game plan. You know, I hope no one started following me for the first time in August and just blindly bought MGI because I was in it and is getting completely smoked on it. You know, for me, all that's happened is I've given back a whole bunch of P&L. But, you know, it still has been a name that's been good for me overall, and I'm definitely still sticking with it. So that is MGI, MoneyGram. Ooh, it's getting late, but let me scroll through here and see if we got anything else. Yeah, Apple buyout of Peloton was what I had been talking about a while ago. But it looks like Apple's trying to go it on their own a little bit. But there might still be symmetry. I mean, just imagine if they brought that Peloton screen into the Apple universe, right? Like that's like an iPad basically going forward or whatever, and it runs on the iOS operating system, and you get the cool blue bubbles if someone texts you or something like that when you are Pelotoning as opposed to the not cool green bubbles. It definitely just offended some Android users here in the VTF. Colton asking about LCID. I did not go over LCID. I told everybody in the team this morning not to buy it. I know Felipe sounds like actually crushed it to the short side. But I don't think that was necessarily an easy trade. It's just so extended. 42 is the last level it broke out from. It's actually pretty impressive that it was able to hold 42 as support today. And that's with Tesla selling off and everything else selling off. It's still extended. If the ADMA was at 42, I would say maybe tomorrow you could try to be long versus 42. I just don't have the conviction in it. The big key on this LCID has been option flow. The big moves on this LCID seem to keep happening when we see the big, consistent option flow coming in. And if you want to see the option flow coming in, get into the ProDesk VTF. Brent here, at what levels do you consider a healthy but ideal pullback on the Spies and the Qs? Yeah, I think I mentioned that already, but I can take a look again. I'd love to be a more aggressive buyer, like Spy 460. I think would be nice. I could start getting excited for that. Qs 390, maybe that's even a little early. Maybe let's call it space between like 386 and 390 on Qs. Would be something I think to get a little bit more excited about. But you gotta start looking at it even as it touches the ADMA. It'd be nice to have one of those like pierce through continuation hammers where we pierce through on the Qs down to 390, but it closes right at the ADMA on the daily chart. That'd be a solid one for creating a pivot for upside trend continuation. It looks like Neo came up short on guidance. Q4 guidance on Neo is a miss, so that's why it's down. Cool. Stefan here saying MGI is a transformation bet and much cheaper than pure digital bets. It trades at 4.5 times EBITDA and has a 20 to 25% FCF yield with debt now at 5% cost. So thank you for that. UNG broke down pretty hard. We had definitely some concerns about that one on this day, and it happened to be the top. Colin saying, I posted a lot of Vale info the other day, back and forth with Stefan. They have a really low PE, good cash flow, huge dividend, and they're getting smoked because iron ore prices have gone down, and that trend looks to continue with Chinese stopping their infrastructure build. They got some positive flow with electric vehicles, though, as they are major producers in nickel and copper. So there is some more detail for, I think, Ernest, who asked about Rio. But it probably, the Vale information should apply there as well. Nice, Stefan. Whosup1 is asking about EVGO. Yeah, a lot of chatter about this one. Yesterday was the day to be involved in this. I don't think today. You're in this today. You're just chasing these gap ups. You're asking to lose money if you're buying. I don't care. I don't care if you buy EVGO at $17 and it goes to 30 today. It's not responsible. We don't buy stocks that are just extended, and it's still super extended. The infrastructure bill I think is really good on this one. This is the one that with the GM partnership, right? So you got the GM partnership. I think that's really good for the stock, obviously. But you wanted to be buying this the day before yesterday at better prices more aggressively, not chasing any of the prices it traded at today. So at this point, the ranges are huge. It's still extended at $15. Let's let this thing reset up and we can look at it for a new trade. Vale has a 3.5 PE and a 23% dividend. Wow. Defending stock price with large cash on a balance sheet and cash flow generation, sort of like Bed Bath & Beyond. So Stefan comparing the cash generation and cash on balance to what Bed Bath & Beyond has. And Stefan's one of the main reasons why I started trading this Bed Bath & Beyond some months ago. Initially, I was a short seller. He was on the long side. I think we both made money at the same time, which is super cool. And then you convinced me to see the light. To see the light. The Diego giving us some more information on Rio and Mgi. We are seeing signs of a global slowdown led by China, and China is the big importer, especially from the South. And Diego didn't say this. I'm adding it on. The Chinese are the big. They're the ones shipping in all the raw materials from the South American countries.
70% of iron ore.
70% of iron ore goes to China, says Colin here behind me. But I guess for our purposes, we can trade at 25% or so pop. We can trade 25% or so pops. Just never fall in love with them. Yeah, and that dividend number is crazy, though. Yeah. Next here from Sam Whitfield. What is your insight on ASO? I like this ASO. Looking for all-time highs with big volume. Not too excited. I like this ASO a lot. It's been broadly on my radar. I think it has a large short float as well. I think this thing looks great above 48. I love the current pattern it's building out. ASO looks good. Right, EVGO got the GM partnership and with Uber as well. That's right. Thank you, Zahor. And Steve asking, all right, this is going to be the last question because it's getting late. Steve, can you talk about consolidation wedge pattern after the recent breakout in Bed Bath & Beyond? Yeah, sure. What did this do today? Yeah, I thought about bringing up Bed Bath & Beyond in the morning meeting today, and I pulled away from it. I know it had that tighter inside day yesterday, but the tighter inside day with still this little degree of extension hasn't excited me yet because there's a couple of things here. The internal price action on this Bed Bath & Beyond in this recent situation here has honestly not been great, in my opinion. Just from a study of price action itself. It's been very heavy. There's been very consistent selling in this Bed Bath & Beyond. And then it rips when news comes out, right? So it had the initial news we all know about on this day. It ripped all the way to $32 or whatever. And then the next day, this thing was so heavy all day. And then the next day after that, so the fourth here, the volume is lower. It was also really heavy that day and traded in a really tight range. And then 2 days ago, Citron came out, right? And Citron said that they have a $50 to $70 price target on and they're long or whatever, and I got a pop on that. But until the Citron news hit, the stock was trading also not. Look at this, right? This is what I'm talking about. Big gap up in the intraday price action. The institutions, somebody's just selling this thing. It's so heavy. The next day, same thing. It found a little bit more equilibrium, but it couldn't even catch a bounce back after trading down from $32 to 19. It couldn't even I really thought the next day, all right, we're gonna get a little bit of a snapback to $21.50, $22 maybe. After how big that first day one sell-off is, the seller's going to be going to get that snapback. Didn't get it all. It still was super heavy. And then when the Citron news came out, that morning it was still super heavy. It actually broke lows post the news with Kroger and the announcement on this day. It broke new lows and was still not trading well. It was very heavy. And then, okay, new news comes out. Citron comes and they gets the initial bid. And then the rest of that day and all of yesterday was still really heavy, and all of today was really heavy. So I really haven't liked the internal price action on this Bed Bath & Beyond. I'm still long. My profit target is not as aggressive as Citron's. I'm just looking for a move to mid-30s on this. I do like, I think I have a recent video that's on the Derrick the Trader YouTube you guys can look at. I do like the fundamentals of Bed Bath & Beyond. I like the cash flow, everything that Stefan's talking about. I like the accelerated buyback program and all that stuff. But the price action on this is not. That's why I didn't bring it up in the morning meeting today. I specifically, purposely did not bring this up as an inside and up buy today because I didn't like it. I want more clarity from how this thing is trading. So I need to see better price action. It can't only go up when a news clip comes out because we're going to run out of news clips. So I need better price action on this thing to start telling other people that they should get involved in it as well. I've done so well with this name at this point in time that I can deal with the ebbs and flows of it. But I don't like it as a new trade right now until we start seeing the better price action to confirm. All right, let's end it. It's 5:15. Good meeting today, everybody. I hope everybody is continuing to learn, and I hope everybody is making some money and saving themselves money on tougher days, making money when the opportunity is there. I'll see everybody tomorrow. Have a great evening.